Here we go. We're going with the disclaimers. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is going to be a live trading room. We will be taking some live trades. It is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during this live session is not a recommendation or suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. And having said that, let's get to the charts. And we had an alert this morning at 6:30 this morning at the British US. We'll see where it is. Can everybody see my chart?
We can't see your chart yet.
You can't see my you can't see my chart?
No, just
You don't see my chart. Okay, let me stop sharing. Sorry.
No, just disclaimer. Okay.
Just a disclaimer. Okay.
Now AP.
Now do you see the chart?
Yeah.
Yes.
You should see the British US chart. Is that
Yeah.
correct? Okay, good. All right. We're back in business again. We'll figure this out. All right, so we had at 8:30 this morning, we're going to put our vertical line here at 6:30 this morning. It was an ascending wedge. Now it looks like this thing's probably may have already broken out a little bit. We did get in this one a little bit earlier, and I'm already out of it, but I was having technical problems in the process. We're going to use our triangle tool. It was ascending, so I'm just looking at it just off the top of my head here. I'm looking to see where the pivot high, pivot low is before the wedge. And so it's ascending, so I'm going to start my A down below. I'm going to bring my B up, bring my C down as close to the low before the wedge alert, and then bring this back up to the D. And that's where I'm going to start this thing. Now, that's not where I'm going to probably keep it, but that's where I'm going to start it. When I'm looking to see if we can find 3 hits, an anchor, a hit, and a hit, all on one trend line. So I'm going to move this back to the B, move it back here, and I can see where I have an anchor. This one right here is a little bit of a hit. And then we have the D, so we have a trend line with three points on it. And you see from my A, I only have my A and I have my C. So I'm going to move my A back and look in the back here and see if I can see something that will give me that 3rd hit. So I'm going to move this back over, and I still want it to be ascending. And if I use the anchor where it is right now, and it's still ascending, but you see I have this problem right here. So the only thing I can really do at this point is bring my A right back and wait and see if I can get that 3rd hit before I take the trade. So I'm going to use that 15-minute chart, and I'll go to a 1-minute chart. And I'm going to close it up. I'm going to put my C here. Like I said, I'm still waiting for something that gives me an ascending triangle. If I can spread this out a little bit here. And I'm going to move it right down as close to there as I can. And now I'm going to see if I can find something that's going to allow me to give me my 3rd position on this trend line. And you can see that if I kept it right here, there was a breach of it right on this part, and it came back up into the wedge. So what I'm going to do is I don't usually do this, but I'm going to maybe start doing this a little bit more, because I'm looking for that. I want that 3rd hit before I get into a trade. So now I've got my C here. My A is all the way back here. I really still don't have a third hit if I can see, unless there's something in the back here further.
That's exactly what I did.
There really isn't anything back there. All right, so we're gonna have to live with this one as it is. Let me scrunch it up here a little bit. I said this trade is already, in my mind, this trade is already taken off here. But we had the alert. It came down. The original C was here. It came down. I didn't get into it by this time. It went back up into the wedge. But if it goes back into the wedge, I'm going to move this back down. Still looking for that third hit. If I go from here, it comes back. It touches, comes back up into the wedge. Let me slide it back over a little bit. And this may help us get. Now I've got my third hit right here. We have the anchor all the way in the back. I've got my second hit, my intermediate hit. Here's my third hit, goes back up, and now we're looking for the break. And so we look at our two pip area. I really just, and I'm thinking it's more and more, I'm putting more and more weight on making sure we have 3 points, an anchor, a middle hit, and then the end hit. So we have the A, here's a hit, goes back up into the wedge. We move this down 2 pips. It's 35, move it to 33. We come in, we get a close. So on this 1 minute chart, we have, this is our third hit. So now here we go, it goes back in the wedge, comes back. We have the close below, second close below. Actually, we had a third close below, came up, got the blue candle. After the blue candle, once the blue candle turns red, you close as soon as this next candle turns red, you can take the trade. And I think I got in right around 33 is where I think I'd end up getting into this thing. So you're in the trade and you put your stop and your target in. Here's the entry. And you're looking for 7 pips. Top and bottom. There's our 7 pips. And you can see this thing really took off and really materialized.
Yeah, it went almost like 30 pips, didn't it?
Yeah, I got out after about 5 because I was having trouble trying to get logged into my computer, so I wasn't able to. I didn't even get my full 7 out of this, but I did get 5, and this was a really nice little trade right here.
Interesting observation, guys. The whole moving average is going to be your best friend when it comes to staying in a trade longer when you take these wedges, because you can take it when it flips red, and you can hold it until it flips red on a 5 minute, and you're going to get a whole big percentage of the move without having too much of a swing back. If you wait until like the 15-minute hold to flip, then you're going to have a little bigger pullback, right? So I really do like the 5.
And this is the whole moving average. No, Matt, just for clarification, you're talking about now on our whole moving averages here, we have 3 moving averages. The top, if you can see this, we have, let me see if I can scrunch this up here. You can see we have 3 separate lines. The top one is our 15-minute whole moving average on a 1 minute chart. The middle line is a 5-period moving average on a 1 minute chart, and the lower one here is a 1 minute on a 1 minute chart. Now, my question to you, Matt, is that when we're talking about you were talking about the 5 minute, are you looking at a 1 minute chart with all 3 being red? Or are you at the 5 minute chart looking at just the 5 and the 15 being red?
No, I'm talking about the 1 minute.
1 minute. So you can see, like right here where we entered the trade, you can see where we had all. Let me just move this down here a little bit so we can see the RSIs here. And just for anybody interested, I am having a meeting today. Hopefully, I'm having a meeting today with the developers, and we should be getting very, very close to getting. All we have to do is get through okay, and we'll be on our way with getting this thing available to you guys. But we have Here's where we entered the trade right up here. Let me just see if I can make this a little bit more vivid here. This is our entry to sell. There we go. There's the entry to sell. And if you look here where the entry to sell was, we had all of our RSIs on this 1 minute, on the 1 minute. Let me put out the other charts here too. The RSIs on the, so all of our RSIs were coming out of this 60-40 range, pointing down, going to the 11. It was on all three, on at least these two charts. Let's see what it was on this one here. Same thing on the 15. Right, all of our RSIs are coming out. The dollar was showing strength, still showing strength. And as Matt was saying, that you're moving all these whole moving averages on the 15-minute chart, on the 1 minute chart. At this point, they're all red. And if you just kept to go on red all the way down to where you got the first screen. Now keep in mind, as these candles are closing out, this thing may flip back and forth to green and red, so you have to wait for it to close. You had one little candle right here was closed, and then it turned red, everything was down. And you can see where you could just follow this 13-period moving average down, and once it came back, that you could have, yeah, nice little, but once it started crossing here, that might have been a place where you may say, okay, it's time to get out.
That would have put in, what, 20 pips in your trading account?
So, I'm sorry, Matt, what did you say again? I just got a cup of coffee delivered to me.
Oh, there you go.
She was
Nice.
faster than my service.
Yeah. No.
Yeah,
That's great.
Christine was a little slow.
Oh, that's too bad. She'll make up for it later.
Yeah.
So
But anyway, no, go ahead, Matt. You can.
no, you're fine. So what I was saying
Speak your mind there, Matt.
I will. I've had it long enough. So here, I really do like the 5-minute whole moving average. Don't worry about the one too much. If you wanna get your 7 pips and bail, just take the 1 minute. It's fine. But if you really want to stretch those trades and maximize the amount of pips you can get out of a trade with a little bit of erosion, you could do the 5-minute whole moving average, and you can see that it's still red. So you'd still be in the trade here if you were following the 5-minute whole moving average. So momentum hasn't shifted yet. You see that the 5 and the 13 are separating from themselves. So it means that like momentum is on the downwards.
So Matt, if I understood you correctly, you were saying the 5 on the 1 minute chart though, correct? Or on the 5 minute?
Oh, it's very similar.
Okay.
The way that it's calculated, so it's a weighted moving average. So on the 1 minute, it's a little bit different, but not very much. It'll give you a precursor of what's going to happen on the 5 minute.
Okay.
And just so everybody knows, we're talking about these two red lines down, this little bar of red and green bars that keep changing colors. That's what we're talking about. This is the whole moving average. It just happens to be overlaid with the RSI, which is right above it. And that's one nice thing about these indicators that we're going to get available to you guys, is that this is basically well, actually, when you put it on a 1 minute chart, you have 5 separate indicators all built into one indicator. And that helps a lot, just not only for the loading of it, but it also helps with the amount of indicators that are available to you with different types of packages you have with TradingView.
Yeah, you can use the free one.
Yeah, and one thing I'd like to do, especially if I'm trying to catch a big run, is I like this 13 exponential moving average. That's the yellow one that we have right here. The 13, as you see, as how it's just tracking on a really strong move, that 13 will hold. It came back. You see where it came back up and just tagged the 13. Now on the 1 minute chart, if you see where that tag was, you'll probably see where it actually breached the 1 minute, which is right here. But also keep in mind that oftentimes the 16 or this 62 moving average on the 1 minute chart is virtually the same spot as the 13 is on the 5 minute. But this keeps you from getting your head wrapped around the axle with saying, oh my gosh, here it is, I better get out, and you get out right where it turns around again. So once you kind of, it's good if you're going to try and go for more than that 7 pips, then try and follow it on a 5-minute chart, looking at your whole moving averages, and also trying to keep, so right now you would still be in this trade because it didn't breach that. And so, but there again, that was a pretty significant little pullback in that. It referenced when you look at how far that, because you don't really know exactly what, you don't know. One thing I found out a long time ago is you don't try to pick a bottom, you don't try and pick a top. You go for your targets and let it go at that. But you see, this is almost a 10 pip pullback, but it still would have been, it's still well within here. And so as this thing, if this thing keeps on going down, you still got your 7 pips. Your 7 pips all the way up in this little region up here. I'm going to take this off now since we're done with that. But that's how you can help. That's how you can stay in the trade a little bit longer, just by with the RSIs. You get the hook down here. Once this thing hooks back, it came right up to the 8, that was the orange one. Hooked back down. Once it crossed here, then you may want to think about just getting out, because as long as this 8-period moving average stays below this 40-60 range, you're still looking at this thing still having possibility of being some more room to the downside. And having said that, at 8:30, before I forget, there was some news announcements at 8:30. Let me see if I can find it here on my. And everybody sees my Chrome, my web browser, I think, right now.
Yeah.
Okay, let me see. Daily routine, the Forex factory.
I like how you called it your daily routine.
Yeah, well, and you can see right here on the at 8:30, which is in about another 12 minutes, we have some CPI reports on the U.S. dollar. So these are red folder events. So you may want to, if you're in a trade, you may be looking at some volatility with the U.S. pair with that. Okay, let me stop sharing this and let me see if I can go back to my screen sharing where I had the screens. See if I can get back to where I was. Why did this thing? What happened to my screen? Oh, there it goes.
Ah, there you are.
That's
You're back.
better. Eventually, I will get comfortable with my laptop because I'll probably be doing this more often than I'd like to think I will. But anyway, so this is the that's pretty much the right now. I'd say that would be the end of any involvement I would have with this bearish pound. Like I said, I wouldn't be getting back in again. Had a nice little run, made some nice pips. Overall, this thing played out to be, if you got in here at 33, that was a 28 pip move. That's a nice. That's your trade for the day. It might even been your trade for the week.
Yeah, I would take that for a week.
And let's see. Now we also had the U.S. yen at 6:30. This is Eva's favorite pair. We had a nice discussion about that yesterday.
Oh.
On another trade for the day, Jay had put in that he took the Aussie dollar this morning, London time, and he got 2% out for that day.
Oh, congratulations! Good job. See, and that's the thing with this is that you don't have to go for those big runs, and if you don't want to be spending your whole day in front of the computer fighting trades, just get these wedge alerts, get in, take your 2% for the day, and then go and have a life. That's why most of us are trading, so we can get a little bit of income and have a life in the process. Let's take a look at that. Was it Aussie US? Is that the one it was, Christine? Let's take a look at that one.
Yeah, it was Aussie.
Aussie US at 4 o'clock East Coast time. Aussie USD. Let's just take a look at this while we're waiting. We're still waiting for another alert right now. There's nothing new. We'll just keep
That
an
was
eye
an
on it.
awesome trade. That's good.
Okay, so we're gonna go to a 15-minute chart. Oops, I didn't want that one. We're gonna go to a 15-minute chart.
What did you say? 4:30 a.m.
It was 4 o'clock East Coast time.
Oh,
So let's we're going to start with a
yeah.
fresh screen. No indicators. 4 o'clock. We're gonna get our vertical here at 4 o'clock. Let's spread this out a little bit. Move it up. And see, and it was a ascending wedge, 4 o'clock. Ascending, so that means it's going from low to high. So again, I'm just going to start off with my little triangle tool. I'm going to start from pivot low, looking for the high. I'm going to start off with a, let's see, well, let's just try it from low. And we'll go to here, and we come up here, and we have a wedge. Now the question is, do we have, now again, I'm looking for an anchor with a couple hits. So if I can, this isn't too bad. There's a little bit of a hit here. Here's a hit. Here's the anchor. That's the low before the wedge. We could go up a little bit higher because, frankly, it's going to have to break this trend. The ascending is more important on the bottom part than it is on the top. But you can see where it did kind of walk around here a little bit. Let's see. I think I'll just keep this. Yeah, I'll just keep it here. Here's a low. Here's a hit. Here's a hit. Flatten this thing out across. Now the question is, which way is this thing going to break? So we're going to go on our. We're going to see where the. Actually, let's do a replay on this. So we can do that.
Just a question
Yes.
for you. You've got the line, the AC line, cutting through a couple of candles.
Yeah.
I've
actually,
always heard we should never cut through candles.
Yeah, basically, and he's right, or he or she is right. And I was kind of looking at that myself here. Yeah, let's just put it here because that's really what the rule is. We don't cut through the candles. And so, okay, so anyway, here's our trend. And we're also looking at, remember we said that we're trying to get that extra hit. So if I move this C over to right where the alert was, I still don't have my third hit. But now this one right here, it's a near hit. These are actually getting pretty close because you're looking at 71.15 to, we're looking at if the candle, if there's a pivot, if there's a low that comes in within 2 pips or within about the spread of what the pair is, I don't really like, I'd like to see this a little bit tighter than that. Now the question is there anything else over here that would give us a little bit more? No, there isn't really much you can do. Let's just take it from here. Let's just take it from where it is. Let's go to a 1 minute chart, and maybe a 1 minute chart will give us a little bit better picture of it. That's a lot of times why I like going to another time frame. Let's see, let's do the bar play at let me get this thing close in here where I can see what I'm doing. This is, again, this one's just sort of, this is educational purposes only. This is trying to do a replay on this. Here's where the alert was. On our 1 minute chart. Let's make this just strictly the chart here. I'm trying to find where we can. I do like getting that third hit before. These are close. No, they're close. I'll just have to accept those as being close enough, I guess. It might be over here. Move my D over, and let me spread this out a little bit so I can see where my D is. And there's, okay, so there's our, there's our 1 minute chart. Let's see where our RSIs are, or where our tools are. At this point, the Aussie's strong by quite a bit. Aussie's the first pair, so we'd be looking at this thing breaking out of the top. Let's play a candle by candle. Spread this out a little bit here. Inside the wedge, so inside the wedge. All right, there's a breakout into the bottom. Let's see what happens. Now we want to look at our 2 pip range. Let's draw that. So we have, there's our range. And we want to move it 2 pips down. So let's mark it as 71.18.7. 71.18, 71.16. 71.6. Let's make sure everybody. Maybe this thing start. 71.19, 71.17.3. 17.3, right about there. I'm going to lock that. This is our entry to sell. Entry zone to sell. Put the label on that. Okay, so this right now, so everything is down. We still have the higher time frame, the 15-minute hole is still green. The dollar is showing strength. It's on the 1 minute chart where I can't really switch back and forth or else I'm going to lose my replay. But right now, this first candle, it did not close below the wedge. This one did. So right now we could be looking at as a potential entry. Right in here, we'll see if we get a blue candle. This next candle should turn blue, come up to near the wedge, and then come back out. And we'll see if it gives us a chance to get in. There's our blue candle. So right now, if this candle turns, we could put a market entry to go short right here. This would be the entry to go short. You wouldn't be in it yet. This would be a sell. Entry 1 to sell. And so now if this candle, next candle turns red and gets us in, we'd be out and we're looking for 7 pips. We're looking to go short. Right here. Now we're not in this thing yet, we're just getting things set up to see if this is what we want to be doing, if it gives us the opportunity. So now we do the replay. There's our red candle. Yeah, with that, I would say you can maybe even slide this one up a little bit higher. And if it breaks the bottom of the wedge, you would be in the trade.
Yeah,
not in the trade yet. Now this would be a no-go on this one. So now we'll just see what happens, see if it comes back in and retest it. You have a little bit of a trend going from the D now to, here's a little pivot. So here you have to be taking this into consideration. You have a little bit of a trend going on the downside. We'll see if it breaks this. If it does, we just still want to wait till it breaks to the upside. Okay, now this is broken, so this thing is no longer valid. The trade is no longer valid at this point. So we're going to take all this stuff off. Slide down. Now we're going to see if we see what happens at this end of it. It's coming up. It's retesting. Didn't close above the top of the wedge yet. Let's get our 2-pip range off the top of this. And squeeze this in here. And looking for 2 pips, that's 71.31, 31.9, so we're gonna go 33.9, right about there. I think this is gonna be our entry to buy. I'll lock that. Now we're gonna see if it's gonna give us the same scenario we had here, at least with this. This is one reason why I kind of like having these market sell stops, because like this red candle would have pretty much could have gotten you in, and then you would have gotten stopped out. Now, even if you would have gotten short, it would have been, if you're going short, you'd probably been looking at your full 7-pip stop. But that's why when you get this red candle, just because if this held, it's going to go a lot lower. It's probably going to go lower, and that's where your big move is going to be. If it doesn't hold, then you can see what happens here. It goes back up into the wedge.
What
So
I
wait and
like,
see.
before I like taking a trade, I do like it to come back and retest the wedge some way, and then I like to see a 2-pip pullback in the direction that I want to take the trade. In this way, I'm not getting head faked here. Because if you just took the trade at the break, like some other people will, you're going to get stopped out here.
Right, because what happens a lot of times too is that the spread will get you, because really what's happening is that this candle came up. What you really don't know is, did the sellers come in to meet the buyer's price, or the buyer come up to meet the seller's price? So if the buyer came up and says, okay, I think this thing's going to go long, and so the seller's price may be up here originally, but they're thinking that, oh, maybe I can get more out of it. So the buyer comes up and meets the price. It depends who's going to be more right. Is the buyer going to be more right, or is the seller going to be say, oh, I should have waited? So, and you don't know. You don't know whose order is being filled. Is the buy order being filled and the seller coming down to meet it, or is the buyer going up to meet the seller's price because they think it's going to go up higher? Again, you don't know. But anyway, that's one reason why you have this zone. That's your 2 pips. And we use that a lot of times because that gives us a range of our spread. And it usually gives us, in that way, if this thing breaks to the top, oftentimes it'll still come back and retest this 2-pip area. So right now you see you have the blue candle in. It's in the wedge. It closed inside. Now we're looking for, on the 1-minute chart, I like seeing 2 blue candles, at least 2 consecutive blue candles. You have one didn't quite get into the wedge. I would accept this one if I can see a little bit of a red candle pullback when this candle closed. And there really wasn't, there was like no wick at all. So that means, okay, it came up, you'd be okay taking this trade. You're inside your 2 pips, you have some momentum. I still like to see a red candle, see a little bit of a wick come down with where this thing closed blue. If I can, as this candle closed blue, the next candle should oftentimes, in fact, more often than not, when you see there's a little bit of a wick, that means that this next candle turns red briefly, comes down just a little bit along the body of this candle, and then comes up and says, okay, that's as far as it's going to go, and then it goes up higher. That's why I like seeing that little bit of a, and besides there's some sellers that came in right here. It didn't close above our 2-pip range. And so let's see what happens next. There's our red candle. So now I'd be looking at, I would be okay with having a order right here, and to buy. So it would be a entry 1 to buy. And then if it comes back up, it gets you into the trade. Let's see what happens. It's back down into, now it came back down into the wedge, but it couldn't hold into the wedge, which makes it even better yet. Aren't we glad we didn't get in so far? Now we're coming out. Now we're looking at coming out the bottom of this one. We can also see now this slope of the wedge is up a little bit higher. So even though you got in, we've had an opportunity to get in here. Now you're looking at, we have to be looking at this area. Now we start the whole process all over again. Okay, there's a close below the wedge. And you can see where this candle came all the way down. That was a pretty strong candle. This one just came to the top of the wedge. Now you can use these references over here. You can say, okay, if it breaks the bottom of this blue candle, I'll be in the trade. But we're going to see, and you get a little bit better entry depending on how things go here. See, this was blue at one point in time, came out and turned red. At this point, you could take this thing and go short. If you do a market entry, you probably get filled somewhere down around here and see what happens. Everything is, well, we still have the green, it's still strong green on the 15, but you have the red and on the 5 and the 1. It's still showing the strength for the dollar. Now the question is, can you get your 5 pips out of this thing? There you be in. Let's see, measure this out. See where our 7 pips are. And see if we can get it. So far, so good. Still hanging in there. Let's look at our moving averages. Our moving average is saying that all the moving averages are in the right direction. Now it's coming back and retesting the wedge. Came back, tagged the bottom, our 2 pip area. Still not sure we're going to be able to get in. Our top is way up in here. If it comes back into the top of the wedge, you may want to just take an early exit on this thing. Now what I'm looking at, one thing I'm looking at on this one right now is you have this low here. It just came down and made a higher low. This could be the sign of a stronger move to the upside. So I wouldn't give this one a whole lot of room. If it breaks through the top of the wedge, I'd probably be out of this thing. That's still good, still holding. The 62 still held, still have this pointing down. This is still showing strength to the downside. Still not profitable yet. Still don't have our 5 pips. Let's see where these zones are. Okay, so now it's coming back up into the wedge. Let's see where our Fibonacci lines are. We have a blue Fibonacci line right here. It came up and it's tagging, it's crossing that right at the moment. So that's not a good sign for a short. Still hasn't broken the wedge. It's still okay. This thing would give me some heartburn at this time in the morning. And now we see we're also getting near the end of this peak of this where the wedge was drawn.
Yeah, this one would have given you a pretty nice heartburn, but there's one observation that I want to make, and understanding that hindsight is 20/20. There's a little bit of bias in this, but based on some of the back testing I've done, I don't like taking wedges around the 4 o'clock in the morning when the session is about to open and whatnot. I'll hold off until maybe 5:30, 6 o'clock, but it has to do with the time of day. I don't want to be taken right at the session open.
Yeah, I think I said I'm usually not up at 4 o'clock in the morning to even be looking at this, so this is kind of a new one to me. But you see, right now it came back up. Now we had a strong move up. Now, one thing, as I pointed out down below, is that you have where you have a low, you have a higher low, and now you have a strong move to the upside. So this thing could start breaking out to the upside. This was your head fake because you weren't even able to get your 5 pips. The most you were able to get out of this from this break right here, which is about where you got in. You're looking at 3 pips. Let's see if I can draw this a little better. Let's see, we had right from this area to the low. We had about 4 pips. You came pretty close to getting your 5 pips, but you have had been right on the money for your entry. And if you didn't get your entry till down here, which is a little bit, and even if you took the trade off of this candle, you still would have, your spread's 1.5 pips, so you still wouldn't have been filled till 23.2. So this is where your fill would have been down here, and so you can see where you've been fighting it all the way down. It just didn't break enough. But now this one right now you're sitting at 5:30 in the morning. The London market's open. Now you just have the strong move up, and here's where I think is where you're going to probably end up getting your trade. I don't even know where this thing went. To be honest with you, I didn't look at this one.
Sorry.
Oh, go ahead, Christine.
Excuse me. No, Jay, who had taken the trade, had written a good thing in the chat box talking about our contrarian views. Now, he only trades the London time because he's in London, so he doesn't trade the Asian or the US time. So, but he was saying as far as like percentages of people taking long and shorts on this pair, how there were more people in the short side, which if we take our contrarian view, we'd anticipate it going to the upside.
Okay.
I just wanted to put that information out.
Well, that's good. Yeah, and if you live in London, you're going to want to trade that London open. And the thing is that again, when the London market opens, here's where you're starting to get the move. And like I said, most of the time, unless I'm rarely up at 5 o'clock in the morning. But a lot of times the trades that we do get, some of my best trades that I get are the ones that alert at 6:30, 7 o'clock in the morning, because usually by the time 8 o'clock comes around, when we have these sessions, they're pretty much already played out, which is unfortunate, but most people don't want to be getting up that early to be trading, myself included. But I'm usually up about 6:30 getting ready for these sessions, so a lot of times I do catch those trades. But right now you can see, now what I'm looking at here is, I'm looking at this candle over here for where it came up first, gave us a head fake, came down, gave us a head fake. But again, this is all during that early, probably pre-market London time. I'm not sure exactly what time the London market actually opens. In fact, if you know the answer to that, type in the chat box so we can share that. I think sometime after 5 o'clock, usually you're okay to start taking trades with the London. Gives a chance to open up and start showing some volatility.
Excuse me, Jay said 8 a.m.
8 a.m. London time, so that's going to be 8 a.m. Eastern?
No, he just put 8 a.m. No,
8 a.m. So 8 o'clock London time, and we're about 4 hours, so that'd be right about 4 o'clock in the morning, right about where this alert happened. So it gave it, let's see how much, what time, 4, this was at 5. So it took about an hour and a half. Well, actually started making this move after 4 o'clock. So this was the beginning of the London session after about, this first move was at 4:30, so 30 minutes after. So yeah, I mean, that was, it's certainly within the ballpark for people living in Europe.
Yes, you said the trade alert is 9 a.m. Greenwich Mean Time.
Okay, so that's right. That would be a good time for. Actually, that'd be a good time for London, I would think.
Yeah.
So anyway, so once you got, well, here's your wedge. Here's your 2 pip break, and you can see there was probably little to no wick at all, and also you can see where that stopped right at. Right before the 2 pip area and stopped right at where this other one closed. And then, and a lot of times if you see a strong candle moving up, with no wick at all, there's a pretty good chance it's going to keep on going up, and that's exactly what this thing's doing. And now the question is, did you get your 5 pips out of this? I'm thinking the answer to this is going to be a yes. So we go to your target. There's 7 pip target here. Let's see if we get, see where we get the 7, if we can get the 7 pips. Let's see where our fib lines are. Here's a fib line up here. Across the green, got a nice cross of the green line, came back, retesting it right, just retesting that green line right now. Retesting the wedge a little bit. Still coming up. All of our moving averages are in the right direction on the 1 minute. And we're getting close. Right here, you're probably pretty close to 5 pips. If you got in down here, if I start seeing it stalling after 5 pips, there's 5.4 pips. So you could have at least gotten your 5 pips. I'm not sure if you're going to get your 7 or not. We'll see. Still fighting the wedge. And back up, and one last little push. It's really fighting this area right up in here. I would have been out by the time this thing came back the second time. I'd be out. And there's a break. There it goes. There you had your 7 pips. And it's coming right up and retesting this red line now. This is your next area. This is another your next 7 pip range. And these are 7. These should be 7 pips on this pair, I think. Yep, there's your 7 pips. So you got your 7 pips, and now it's coming up to this next pip line, and it's starting to retest. Now you also have the 5:13 cross. Now we have green. You still have the 1 red 5-minute whole moving average. But you can see right here where these are, they're all green. Here they are all green. They came up, they're all green. Now they turned red. The 15 was still showing green all the way across. So the 15 still has some, there was still some pressure off the 15-minute chart. And they had these little small periods of red that came in. This is last push. Now I'd be looking at, if you didn't get out of it by this time, I'd probably be looking at getting out. You don't know how deep this is going to go. And now broke this this trend line that we drew here, which is the bottom of the our 2 pip area of the original wedge. And I say at this point in time, once we got past our 7 pips, the trade was over. It could still keep on going up, but we don't know. We'll just play it out. And these off here. And here's where we are right now. And let's see, where's that red fib line? It did cross the red fib line eventually. Look at this nice, look at how much it would have taken you, now giving you some heartburn in the process, because it broke. This was that 2 pip trend line where the entry to buy was off the original wedge. And once you get to the end of it, then it's a different ball game. Okay, so anyway, that was a replay on that one. That was a good little experience. It was a little chance to see some of the things on with a different market. Any more alerts coming in? Nothing. Any other questions? How's our time doing? 8:50. We still have a few more. We still have another 40 minutes or so. Any questions? If not, Matt, maybe you have something you want to show.
Not overly at this point. I'm just trying to get back into the groove after being out for like 2 weeks and trying to adjust to the major life events, you know.
Let's take a look at the US yen. Let's see what it's been doing since we had an alert with that this morning.
We'll make Ava
That's a
happy.
good idea.
So let's see here. Let's go with the US yen. Actually, let me do it this way. US yen. See if I got the right chart up here. No, it's still thinking, I think. What happened to my chart here? There it goes. It's just taking a while to come up. US yen, let's go on a 15-minute chart. And we're going to start with the fresh screen.
It's just climbing and climbing. Has been all night.
Yeah, but it didn't just climb. It pulled back last night. After about midnight, it pulled, but had a pretty strong pullback last night then too. So here's our 15-minute chart. We had a alert at 6:30 this morning, and the alert was a ascending at 6:30. So ascending. So we're looking at this thing. I'm looking for some sort of pivots that will get me 3 points to the on the bottom. So I'm going to start with this. I'm looking pretty much like right around in here, ascending. So we're going to go from here to here to here, come back, tuck it in as close as I can, see if I get my, oops, I got it wrong here. I got the D and the C wrong. Move the D over, get everything moving in the right direction. And we have this is a 15-minute chart, so here's an anchor, here's a hit, and we have, let's see, I can pull this over back to here. If I pull this over, way back over to here, I'm gonna get a hit. So I got my 3 points. Let's take it on to a 1-minute chart. So I can find my chart. There it is. I'll tell you, let me take it to a 5-minute. It might be a little bit easier since my monitor is a little small. Move this thing over to there. I'll move this one, see where this one is. That's the pivot there. Here's a pivot here. And move my B. Here's the hit. We'll slide this over a little bit to the last candle there of that little range. And here we are. Let's go to the 1-minute. Now we have the game to play. Here's our C. Here's our reference point for the C. Here's a reference point for the D. Here's our wedge. And we can look and see how our strength was. Japanese yen was, well, let's just go and do a replay on this one as well. Here's the alert. I'm just going to do a candle by candle. We're on a 1 minute chart. RSIs are showing going short on during this part inside. Now, the one thing you may want to do is see what your range is on here. And right now your range is 12 pips. And then the next question I have to ask is, I always ask myself, I say, is where is the potential target going to be? Where over here, if it breaks to the upside, how far is it going to go? Where's the range going to be? So you can see if you look over to the left, there's nothing here for the last couple of days on this 15-minute chart. So let's go to a 1 hour chart and see. You can still see where the price is now. There's still nothing. So this thing is rocketing up from a longer time frame. So now we finally found some candles over here. So let's take a look and see where those candles are. I'm coming over. So right now I'm on a 4 hour chart before I even found anything that even came on the chart. Here's where the price is. So we had a candle here. So if you look, I start look and see where the wicks of the candle are. As soon as I get a wick, I come across and see where I get until I get another wick. When I go that, then this would be the first body. So this would be, I'm not sure where the price is right now, but this would be an area. And let's see, let me draw this, change the tempo on this. Let's do that. So right now we have this body and then this wick is something. So basically what I'm saying is that when you see these wicks on the top up like this is where the sellers are coming in. And then once it gets here, here's the wick, here's the body. You have to come and go all the way up until you get to the top of the next body, the next red candle. And that's where the next range is going to be. I'll go and I take it to here. Now you also can look at the bottom of this blue candle, because this is sort of like a drop. It based, came back up, and then it broke to the bottom here. So you can take this whole area right in here as a zone. That way. But even more so, we're looking at, so we have that's an area. And this is significant right here. On top of that wick. So then I'm going to slide this thing over and see where we are. This is where I'm primarily interested in, this part right up in here. That's what I'm primarily interested in, because once this gets broken, there's really nothing stopping this. Now there is some action going on because of this four hour candle. But let's come over here and you see. So this is the area that I would be looking at. This thing's probably going to, it's going to have to get through this in order to get before it's going to turn around. So let's go back to my 15-minute chart and see where we are. You see, it already broke that, which means. So now my question is, how far did it go? Where is this? Where's the next? If it came all the way up to that area, let's go back to that 4 hour chart again and see where it's at. So the fact it broke this area, there's nothing to stop it. The next stop for this thing to go could be all the way up to here, up to the 107.19 area. And maybe, so we're looking at, since this got broken, and these are relatively small candles. This area was the last area that, if you look at this drop here, and you actually had an alert here, this was back on the 20th of July. This is a significant area right in this area, right with this. We have this blue candle, we have the red, we finally got the break from here. And what it's really doing right now is retesting the zone. Let's go back over to our 15-minute and see where we are. So this is a potential area where it could still come up and retest this. But having said that, let's go back to our original point of discussion here. Let's go to a 5 minute, let's go to the 1 minute chart. Here is where the alert was. So we already have our zones that we know where the zones are possible. And we're going to play this thing out. Candle by candle in 1 minute. We know that this was an area that of interest before when we drew our line from before. So this has already been breached, so we'll take this one off. Still inside the wedge. Nice little pullback. We had a little trend line going up here. Here's the low, higher low. And now it broke this area. Now we're going to see what it's going to do in this section here. Still inside the wedge. Still nothing to trade yet. These are starting to come out of the 40-60 range. The dollar is starting to get stronger by 3 on the, again, this is on the 1 minute, so you have to keep that in mind. That's not real. These are all 3 are green, so now all your whole moving averages are green. Now, if you were real aggressive, you could maybe start thinking about maybe taking it as these come out, but I would hesitate. You're only a couple pips away. You're only like 5 pips away. I would be careful about that. Basically, you're still waiting for it to break the wedge. You're looking for some strong blue candles up to the wedge area. Let's draw a trend here. Find our zone, our 2 pip zone. 92.3 is what we're looking at. 92, right about there. Here's our entry to buy. And we keep on going. I'm also looking to see what kind of candles we get coming up into the wedge. If we just get a lot of these little short candles, then I like to see a strong move up into that area. That shows a little bit more volatility is coming into play. That's a little stronger candle. Again, we're looking for the close above this blue, the top of this blue candle area over here. I want to see a blue candle close above that zone right there. Okay, now we're up into our buy area, into the zone to buy. It broke. We have a blue candle close above this area. It's in the zone. At this point, I'm still looking for a red candle to come back, but I would be looking to see a possibility of a buy order, a buy stop. Notice this would be like a buy stop to go long up around this area. It's not there yet. We're just sort of marking in our marks laid here. Okay, so you saw that candle first was red and then came back blue again. At this point, I would be okay to take this trade right there. It would probably be filled, or I can just say this, if I can get filled in on there, because that's about where, if you took a market order right now, your fill would be right up, probably a little bit higher than that. So we'll go long. We're not in the trade yet. We're just getting things set up, just in case. Still not in the trade, still not in the trade. We're getting some basing inside of this, which is good. So this way, if this base breaks, you're going to be in the trade on the way up. You're in the trade. Here's our 7 pip target. Let's see what our moving averages are doing. 1 minute moving averages, everything's in the right order, 62, 13, 5. Tagging the yellow, so the 13 is still holding. As long as it can still hold the other side of the wedge and the 62, I still be okay. I wouldn't panic yet. And coming up to our targets, let's see if there's a target anywhere close by up there. There's our fib line. So here, you notice that our fib line is right at our 7 pip target. Back test the zone. We are above the green line, but we're still at, it seems to be having struggles right there at that, the red one. There it goes, and there's your target. Came up, reached again. You can see, like right now between the red and the blue, it went up just about almost exactly halfway, and now it's coming back to retest. It's going to come back and retest the wedge. There was your target. There was your 7 pips. Trade done. And now it's going way back down below. Now it just broke through the bottom of the wedge, going to the short side. Came back, retested the wedge. And I think that's about where we are. End of trade. End of that one anyway. Actually, it's still going by a lot. But here was the original wedge. There's the bottom part of the wedge. Here's the top part. You got your 7 pips here, and you might have gotten your 7 pips down here. Any questions? You can see how little patience works. You're not always going to get them right. Sometimes you're going to get whipsawed. But I would say this a lot of times, and is that if you do a trade and it doesn't get you your 5 pips at least, and it comes back in and starts going strong, don't be surprised to see it break out the other side of the wedge and just take off. Because that happens a lot. Sometimes they'll just whipsaw you both ways. All it's doing is making higher highs and then lower lows as it's breaking out. But then it's starting to form a new range. With the like with this U.S. yen, especially, if I take all these off, one thing I've started doing also is I look and see where the daily range is, and you can see like in this particular pair. There's a significant range between this area and now, see, this is from July 30th. This was, this is the monthly range in July from up here to here. So you draw a box from your pivot high to the pivot low. And that's, you know, as I often say, you know, price goes in one of 3 directions. Either it goes up, it goes down, or it goes sideways. But when you get a range box like this, it's really going sideways. But inside this higher time frame, this is a daily box. You can see where it's trending down and then trends up, but it's staying within these borders. And if you can take a Fibonacci tool and you draw the range of this, and you find out where the upper 25% of the box is, and you call that your red zone. And then you draw the bottom 25% of the box. You call that your green zone. That's your demand zone. And see what the range of this is. Now that's 100 pips. So, but this is a range, and as you can see, as you start getting into smaller time frames, and you get wedges built into those certain areas, you can start gauging a little bit as far as like, well, how much do you want? If you now you put these Fibonacci tools on and see where they fall inside this range, you can see that you've got a line pretty much right up in here, here, and here. This is a 15-minute. These are probably 60 pips apart, I'm thinking. 21 pips apart, 30 pips apart. So you can start gauging a little bit as far as where you want to see the turnaround, and then what your tolerance will be for your stops on these higher time frames, because this thing can be pretty brutal if you're trade this thing inside a lower time frame, because you're getting some pretty extensive swings on this pair. But if you can get yourself up, if you can get into this zone and find a wedge, and then use the upper part of that or the lower part for your range, that helps a lot. Or if you can see where you are in like the 76 to 61 area, which is pretty much where it is right now, that will help compartmentize your trades and your range. That's about all I can say about that. It just helps to help narrow it down a little bit, to see how much of a target you really want. But when you get in these, especially when you get in these big swings and big moves of like this pair has been going all over the place, the Euro US is the same way. When you start getting moves like that, it really helps if you can know where you are in the bigger scheme of things, as far as, are you in the middle of a monthly range, or are you middle of a daily range?
Really seems to be moving down right now too, again.
Yeah, I mean, there's a good chance. I mean, it came all the way up in this area, and it's coming up into this top. It's in the 76 to 61% area right now. Let me move this over here a little bit, so you can actually see where those lines are. Extend this out down a little bit. So a lot of times you can say, rather than try and take the trade in here, wait for it to get up in this area. Well, you can see where, and you can see where, okay, where's the trend line on this? Is there a trend line developing? And I've been doing this a lot, especially on this pair. I'll put the trend line and see, okay, here's my hit, here's my hit. This is a pretty near hit. So this validates that for a trend line. These are all just straight. I mean, this has been rocketing up in the last couple of days. In the last actually week. I mean, you had a nice strong move here. Here's a little wedge flag, but came right on up and is validating this trend. Now you can take it up to this one. You can take it to this one. Now it reached it. And the question is that see, this one's a little bit better. This was a real strong move, but here's where your new trend is right now. This one's still valid. And so if that's valid, then, and here's if you're looking at this from a daily standpoint, you can see that this is the new daily range right where we are right now. There's the low. Actually, let me do it this way. Let me draw our daily box. Let's see, this is Wednesday, Tuesday, Monday, Sunday. So this is like Friday's low. This is really the new range that we're looking in this area. So we draw the box from that. It's getting up near, I mean, it came up, here's a trend line that we're looking at. Here's our new box that we have. And let's put our Fibonacci lines in here. Let me make this one white. I like white better. And we put our new Fibonacci lines just in this weekly range that we're looking at, or this week's range. It helps tighten this thing up a little bit. Move this into a 15-minute chart. Let me get 30 so I can see what I'm doing here. You can see right now we're in the upper 25%. It would not surprise me to see it come back down for the rest of this week, start coming down into this area. But you want to wait till you get a pattern that's going to give you like that little bit of a wedge. We see a drop, you see a little flag pattern coming out, and then take the trade. But right now, again, don't try and pick a top, don't try and pick a bottom. Just wait for the consolidation flag area to give you a, and if you get an alert for the US yen. Now we had one. This was the one we had at 6:30 this morning.
Yeah, it's kind of slow with the alerts today again.
Yeah, we had, again, that yesterday we were getting them all over the place, and today it's been a little bit slower.
Yeah.
But if you start just looking at, even if you don't get the alert, if you start looking at where the trend line is, and you can see where we have, this is the upper trend line that we were talking about earlier. It came up at, I mean, according to this, didn't even hit it yet, but that's, we were on a daily chart versus this one. It's still pretty darn close when you come to think of it. And then you can look at a trend line, looking for a trend. Where's an anchor? Here's a hit. So there's a hit. Here's anchor, hit, hit. And we're on a 15-minute chart. Here is the break. But now see, it's come right into the 62. Now the question is, now we did close below it. So that's so. But I would be looking for this thing to, I'd be more apt to be looking at this. And see if I can find something back here that would give me that support. No, still like that one better. And there's really nothing with that. This is going to be the area where it's going to be where you're probably going to get some sort of a bounce right in this area. Take this off. Again, I'm going to be looking to see where, here's where there's a, come over here, there's another wick. Come on over, and there's another wick. Come on down. So be right about into that area right here would be where I'd be first looking. Had to move up, tested it, move up, test it, and then it took off. So this one right here is the most significant. This is a significant red area, red high. And this would be the area that I'd be looking to see this thing come down to bounce. Excuse me. But we don't have an alert right now. We don't have any alerts. But I said with this alert, I would probably be looking at what we were looking at, this trend line right here. And then we have the break. And maybe I have to pull this thing back to this area. Well, then we're not getting that hit. Could take it to there. There's an anchor. This was a nice move up. Came down, tested it, went up. A little bit lower high. Actually, there's a little bit higher. Here's a high. Here's a higher high. Here's a lower, higher low. And here's the high before the break. Yeah, I kind of like this line right here. Had the break, retested. And you probably had enough for your 7 pips to this area. 8 pips, right to that, to the 62.
Yeah, it was really traveling down a little earlier.
Yeah. Yes, they went up about 100 pips yesterday.
Wow.
Or more.
Well, I can come right back down that 100 pips.
So unless we get some alerts, right now it's still nothing new. 6:30, we're almost out of time here. Any other last minute questions or comments? Now's the time.
Oh, I'm happy to be back finally.
Yeah, we're glad to have you back. Glad to have you back, Matt.
Definitely.
Yeah.
Like I said, yeah. One thing about it, just don't forget some of these higher time frames do matter, especially if you're looking at where like daily ranges are. We had like this was yesterday's daily. I mean, that was a good range. I should say it came all the way, and we gave us an opportunity to get in to. I mean, from the low to the close yesterday was 71 pips, but it did give us a whipsaw because we actually had an alert down here. It did whipsaw us out, got us in, and then took off to the top to the upside pretty strong. That's why I said if you go and if you draw a wedge, don't be afraid to jump back in the opposite direction if it gives you a different picture. If you had from here to here, let's just say to here, and pull this one back a little bit. I'm not sure where that alert was. I think it was. Well, let's see if we can find out where that alert was yesterday. That was August 11th.
Right there at 1930.
That's 9 o'clock. Was it?
1930, you had an ascending. So that would be 7:30 last night.
No, there was one last. Well, actually, let's take a look at that one. There was one.
You want earlier in the day.
They say 9 o'clock that was last night, 9 o'clock. Let's take a look at that one. Oh, we have a few minutes here.
No, 7:30 last night.
7:30 last night?
Yeah, 1930 would be 7:30.
But there's one at 9 o'clock also.
Oh, what did I mess up?
No, let's see. That's CAD.
Maybe it was refreshing.
9 o'clock.
Maybe you were refreshing. USD JPY 1930, so 7:30. But you're saying after that?
This one, yeah, there's one up here.
Oh,
There's one at 9 o'clock last night.
Sorry, I'm sorry, I didn't see that one.
Yeah, actually, I was watching that one last night myself here. So let's just do that one. In fact, I thought about that last night. So let's play that one out here.
Ava, were you awake then?
At 9:30?
Yeah, for your USD JPY.
No, I'm up at 5. So by 9:30, I'm done.
Oh yeah, sure.
So here we go, 15-minute chart. Here was again. This is we're doing evenings. In fact, there's going to be just for those who are still here. There's an evening session tonight at 9:30, and so maybe we'll actually get an alert. But if we had this was at 9 o'clock last night, and I was looking at this high, I was looking at this pivot low. We also had this respect of this part over here. So actually, I kind of like this one's probably more. So it was ascending, I believe. So we're going to go from here to here, tuck it in somewhere close by where we can. This was the wedge I drew last night, and I was looking at some targets up here. There was a green fib line right in this area that I was looking at to see it get broken. Never did do anything until after midnight.
Short little candles, eh?
Yeah, very, very. See that, and that's the thing. There was a lot of wicks, a lot of short candles, not a lot of movement from the time we had the alert at 9 o'clock. I just say from right below there. We're only looking at 14 pips for the last 45 minutes. It really never. I mean, it took a long time to do anything. But eventually, I mean, it went up, came down, retested the wedge, and eventually it finally got up. After it was about midnight, I finally gave up on it. And that was right around, it was midnight. Midnight was right around there. And it was just sitting there within a 5 pip range since forever. So anyway, any other questions? So we have 3 more minutes. So I'm just going to go ahead and wrap this thing up. Any last minute questions? If not,
I'm good.
maybe we'll see everybody till tomorrow or tonight. We said we're going to be here tonight at 9:30, and again tomorrow morning at 8 o'clock. So we wish you a good trading day and stay green.
All right, take care, guys.
Thanks, Eva. Thanks, Christine. Thanks, Matt. We'll see everybody later.